Let's talk about inflation here. Inflation has eased year over year, but has remained sticky in areas like food, energy, and services, despite the Fed's decision to keep raising rates here. Now, joining us is Paul Donovan. He's UBS Global Wealth Management Chief Economist. Paul, it's good to see you here. So obviously the rising rate environment, the Fed doing that because they want to get inflation under control. We're starting to see it ease just a bit. What's your assessment just of where things stand and the biggest driver of inflation today?
Well, what we've had in the States and elsewhere, of course, in the developed world is sort of three distinct waves of inflation. So the first wave, the transitory, the temporary inflation of 2021, when everyone was rushing out and buying washing machines and televisions and so on, that's gone. That's gone into deflation territory. So part of the US economy is in deflation. But then just as that wave was peaking and starting to come down, we then get the second wave of inflation, which is caused by the war in Ukraine. That's a supply shock, and that's around the energy prices. And then as that has faded, what we've been seeing is a very unusual form of inflation, which tends to occur only in certain sectors, and that is profit-led inflation, where companies are sort of sneaking in margin expansions, telling that their customers, no, it's all due to this other problem, but actually managing to get a margin increase in as well as passing on the costs.
Okay, Paul, you say some of this is transitory, so you say some of this is gone. It doesn't feel like it when I'm looking at certain items. So what can the Fed or governments do? Is there really anything they can do to address it, or is it here to stay certain levels?
Well, with the durable goods, they don't need to do anything because they are falling. You know, a television costs substantially less this year than it did last year. If you are talking about energy, that's come off the boil, and there's not much government can do about energy prices, to be perfectly honest. Gestures with the Strategic Petroleum Reserve, but that's about it. With profit-led inflation, there are two routes. You can squeeze demand because any company will find it difficult to raise prices if demand is in free fall. But that's not desirable because, of course, that has other consequences. Alternatively, you can try and communicate better. Say, actually, no, this is not a justifiable cost increase. This is a margin expansion. And by drawing attention to this, you can get consumer rebellion. And, of course, you can threaten things like competition inquiries, which is exactly what's going on here in the UK, where last Friday, Parliament announced that they were going to be investigating food producers and supermarkets as part of an investigation into price gouging or excessive price increases. The Competition Commission has got involved, and all of a sudden supermarkets seem to be starting to cut prices of basic foodstuffs on shelves.
Well, why don't you think we've seen more of a pushback from consumers here in the U.S. of these higher prices? Because it largely seems like consumers have been willing to pay the new price tag up until now.
Well, I think there's a variety of drivers of this. So the first is that in the world of social media, we get lots of sensationalist stories coming around about massive shortages here and the disruption of war there. And it makes it quite easy to sell a story to the consumer saying, no, we've got to raise the price of bread because the price of wheat's gone up. Now, economists say, well, price of wheat's got nothing to do with the price of bread. I mean, bread's all labor cost. Wheat is incidental, but the supermarkets or retailers get away with that sort of story. So that's part of the process, I think. We are also, it should be said, seeing quite a lot of variation in the United States. I don't wish to criticize, but your monetary union isn't working terribly well at the moment. You've got big differences in inflation. And a lot of that, I think, is reflecting the fact that in some areas of the economy, either because of weaker demand, weaker incomes, or just resistance, consumers are refusing to accept the price increases, whereas in other areas of the economy, consumers have perhaps more savings, they're more affluent, they're believing the stories, and they're just accepting the price increases. So the fact that there's so much difference in things like food price inflation between different regions of the United States is quite telling. I think that when resistance takes place, it does work, but not everyone's got the message yet.
So possible consumer rebellion. I've definitely seen what you're talking about, especially on social media with regard to what's going on in the UK, and the terminology that is used is the cost of living crisis. And here we call it inflation being sticky or sticky inflation. Paul, I got to ask, to your point about wheat, et cetera, how much does the Russia-Ukraine war play into the current level of inflation?
Well, the thing is, commodities aren't that important to inflation. The example I always use is milk. You go and buy a pint of milk. You think, well, I'm buying milk. No, you're not. You're not buying milk at all. About 40% of what you pay in a supermarket is actually going to a farmer. The rest of it is sort of advertising and packaging and retail and wholesale prices and distribution and stuff, maybe labor costs. So we have this rather naive idea that, the impact of the Ukraine conflict on commodity prices directly translates into what we're paying in the stores. And actually, it's a fairly small part. Commodities are typically around 10, 15% of the price that we would pay for most goods, and of course, far less when it comes to services. But as I said, this narrative, this story that war is terrible, and you're reading about it on a daily basis, you're seeing it on your social media, that gives you the idea that the price increases you're being asked to pay are justified, even if it is just a fig leaf of justification covering up a profit margin expansion.
Inflation numbers here, they're easing a bit, but still 4.9% on a year-over-year basis. Paul Donovan, always great to have you. Thanks so much.